YouTube Live is brought to you by Apiary Fund. Learn how to trade in the market without risking your own money. Click on the link in the description to learn more today.
Hey traders, Shawn Lucas here with my good friend Nate Allred. We're going to do some Fed trading today. So excited for this. It's a little holiday trading, a little excitement before the break, and we're excited to spend it with you, and maybe Jerome Powell will create a little bit of excitement today. What do you think, Nate?
I really hope so. I love Fed announcements because it's the one time you really know that there's pretty much going to be volatility, and volatility is always a good thing.
Yes.
Especially for us traders in the market. A couple of things. What do you expect today?
Oh, I think I'm right along with everyone else. I expect the the Fed will raise rates a little bit.
I think they've made that very clear.
Very clear.
Yeah.
So I don't think they're going to I don't know that they're going to back off. If they do back off from that expectation, I think that would be a serious signal to the market. What do you?
Yeah, absolutely. So, last week we had President Trump, or just in the last little while, we've had President Trump come out and tweet about
Jerome.
About Jerome Powell.
He's making it personal, isn't he?
Yeah, he is. He sure is.
He has a way of doing that.
So I guess there's a very slight possibility that Jerome feels the pressure from President Trump and backs off. My expectation of that is close to zero, though I think that as much as President Trump would like the Feds not to raise interest rates, I think the Feds, which, if Federal Reserve is a private bank, they're going to do what they're going to do and what they see as in the best interest of U.S. monetary policy. Yeah,
and I think also, I mean, it's not just Trump putting pressure on him, obviously. You had that Wall Street Journal article that came out on Sunday that's like, they're up in the ante on Jerome Powell, saying, hey, what are you doing, Fed, raising rates into this economic weakness that we've seen. So I think I think there's a little bit more pressure on the Fed than just Trump. I think they can handle Trump, a little Trump pressure. I don't think that's going to move the needle too much. But when you start to see a lot of the industry guys, a lot of the leading economists out there, saying, "Oh, wait a minute, you're moving too fast here." There are economic signs of weakness happening all over. I think just last night, FedEx came out. Did you see that article? FedEx came out and said that, hey, we're going to have to revise our earnings forecast and our revenue forecast just because things are a little bit weaker than we've anticipated. So,
yeah, in fact, you're seeing that all through the market. Some of the leaders have really just not been, have not been performing. I mean, you look back in the beginning of 2017. I mean, Facebook was the leader. You look at the chart of Facebook; it is just fallen, it's just in shambles, right? Yeah. Google is kind of tracking the S&P. Amazon is maybe one of the standalones that has done fairly well. So you're right, we are definitely seeing signs of a weakness coming into this. So how that relates to this statement today, I think what people are going to be looking at, and what we really need to be looking at, is what is their words going into the future? Are they going to raise rates 10 times? Are they going to raise it none times? The expectation is 2 to 3 times in the next year.
Well, I think right now we're sitting at 3. So if they lean anything less than, if there's any kind of dovish talk saying less than 3 or anything along those lines, then I think we're going to see a real pop in the Dow. I think stocks will respond. Dollar, now that's going to be another interesting response rate because, right now we're geared up for, 3 rate hikes moving into next year. Dollar strengthened, for the last several days, though, we've seen that dollar kind of come off its highs. And so I think that we're going to see a little bit more of that dollar weakness, coming into this. So I expect euro to pop, pound to pop, most everything against the dollar to strengthen. I really do think that they're going to come out with some dovish comments. I mean, I almost feel like they have to at this point.
Yeah, I mean, what Chairman Powell will basically, I think his tone is going to basically be the numbers, right?
Right.
So I'm not.
He'll still hide behind him.
I don't think he's not like a Ben Bernanke. Ben Bernanke had no filter from brain to mouth, and so you really kind of knew where he stood. I think Jerome Powell is a lot more guarded in his statements, a lot more. We'll see what the numbers say, and I think that's what we're going to see today is them saying, we're going to go by the numbers, and the numbers are going to tell us, and the numbers, and he'll push everything onto the numbers, which will give him the leniency into 2019 to say, well, what I meant was 2 rate hikes, or what I meant was 4 rate hikes, and so he's giving himself that leeway into the future. So my expectation for today is a little bit of volatility, but not a runaway market. How about you?
Yeah, I definitely think some volatility. There's some interesting developments in Europe overnight as well. The Italy, in particular, the European Union came out and said, we're not gonna put some extra heavy penalties on you, even though your deficit's out of whack. We're gonna hold off and let you try and fix it. I mean, I think the Italian budget came out, and they're already trying to go a little bit more austere in how they're managing everything. And so I think that was enough to calm the European Union down. So that came across as really good news, because if they had imposed austerity upon Italy, I think there was some concern that you impose that austerity and it's harder for them to overcome it, and it's a vicious cycle, kind of like what we had in Greece several years ago. So we'll see how that plays out. But I think the market took that. The euro at least took that in a positive note, and so we've seen a good strong rally in the euro this morning.
Yeah, in fact, right along that's where my head has been actually with Brexit the last little while.
Oh yeah.
With the pound, you look at the chart on the pound for the past year, basically ever since they took the Brexit vote, the people, and they voted to exit the EU, you've seen a real weakening of the pound, and so my take is, regardless of whether they actually ever do it or not, the British economy is strong. It's a good economy. I mean, it's not excuse me, it's not like it's going to go anywhere whether they stay with the European Union or not. So really what you're seeing is this weakening is due to the anticipation. Then once the dust settles, kind of like we've seen with Italy, then you're going to see the pound rebound. So I think looking into 2019, the pound is actually a really good long trade. You could see the pound really strengthening over the next 6 months to a year, as Brexit, regardless of what the situation becomes,
right?
As long as there's an outcome, you'll see it strengthen, because then people say, okay, now we know we're staying in the EU, or now we know we're exiting, and thus the economy can take over. And I think you're seeing a depressed pound right now, and it's the same thing with Italy and the bad news for the EU. What you're seeing is not the actual consequences of their spending. You're seeing the reaction or the anticipation of what they think is going to happen in the future.
Yeah, I think that's one of the rules that we have to live by as traders, is we don't always look at what has happened or what is happening right now, unless it's something completely, random or unanticipated. But you're always looking ahead. You're always looking forward. What does this deal what does this Brexit deal mean moving forward, and once you get new information that adjusts that forward thought, then you react and you move with the market as it responds to the new information. So, or you can just be like us, and we just there's all these news events, all these news things, and it just creates volatility, and traders like us, we just like to jump on that volatility. I think that's really what it's about.
Yeah, one of the things I love, I like listening to different people, and I was listening to this guy. Sometimes you just want to hit your computer screen and say that's not how it is. I was listening to this commentator, and he was drawing the analogy of being a trader and being, with sports. And in sports, you're in control of the game, right? You go make it happen. And he was saying that in the economy or in trading, that's what you need to do. You need to go out and need to make it happen. And I just wanted to scream at this computer screen because I said, no, what you're doing in that case is you're trying to force the market, your will upon the market, right? If you take a basketball analogy, you're dribbling down the court, and trading's not like that. You and I don't have enough money to move the market, right? I mean,
right.
The Federal Reserve almost has enough money, and I don't even think they have enough money, right? They can move it for a while, but anyway, so I think a better analogy is kind of like surfing. You go out to the beach and you see these guys, and they just sit there, right? They just sit.
Yeah, they're just sitting out in the
water. They're sitting on the water. Well, what are they doing?
They're waiting for a...
They're counting waves, right? You and I, as people who live in Utah, has never seen a beach in their life, right?
Yeah, I don't know what they're doing out there.
We don't know what they're doing.
I assume they're waiting for a wave.
Yeah, right. No, they're actually counting waves.
They're counting, huh?
They're counting. And
you got some surfers out there that can...
And when they see a big move coming, they position themselves to take advantage of that big wave. So they're not forcing their will upon the waves. You can't do that. And I think that's a better analogy of the market than a sports analogy. And like this, as these notes come out, I'm going to be the last one to read the notes and then come over to my computer and actually click buy or sell. Right. So there's this amount of unknown in there where I don't know what the statement is going to say. When it actually comes out, I'll be one of the last people to read it, but I'm going to be able to see it in the price, and I'm going to go along with it either way. So as we're coming up, we've got about 15 more minutes until Brexit. How do you like playing news as it comes out, knowing that Jerome Powell doesn't have your cell phone number, right?
No.
So how do you set up for?
Jerome?
Yeah,
are you in the chat box
Siri,
here, Jerome?
Find Jerome Powell.
Will you give us apiary traders a little heads up? No. Yeah, unfortunately we're not connected, are we?
Right. No, we're not. So how do you as a non-insider, and for all of the non-insiders who are going to be watching this, how do you set yourself up for that trade where you don't know what has come out or what is coming out? How do you set yourself up for that?
Well, that's a good question, and every trader will kind of approach news events like this differently. But there are times when I have a fairly good read on what direction things are going, and sometimes I like to actually set up a little bit beforehand. You're going to get a big pop right there in the beginning. And, if I have a good read on the market and a good feel for things, I'll go ahead and set things up a little bit early. Never big, These will just be little scalps that I'm anticipating catching the initial shock to the market. And then, you can set ranges. So a high range, if it crosses up above this range, I'm going to get into some longs. If it crosses down below this range, I'm going to get into some shorts. So the second way of looking at a news event like this is to set up these ranges that act as tripwires, right, for you to get into a trade. And then there's a more conservative approach, which, we always support, the conservative approach to trading, but and that's where you wait for the market to set up, the news event to come out, and then you wait for the market to set up 2 pivots after the market announcement, and then you trade the outside of those pivots. So those are 3 pretty common. What do you like to do? I mean, what are your...
You described me very well on that very last one.
On the last one?
Yeah. I will trade breakups or breakdowns on the news event. The way I treat those is really just a scalp. Take a little bit of profits off of the table, so that if we have an outside range, that I'm not as exposed. But I will play the I'll try and play the pullback off of the initial move. So most of the time what I see, and this is a thing to note in the markets as well, is that this is a thing to note as well. In a bullish market, bullish news is over exaggerated. In a bearish market, bearish news is over exaggerated. In a bullish market, bearish news is swept under the rug, right? Oh, it's not that bad, right? And so really you can just rely on the technicals, because it's human nature when people are excited, when things are going great, to say, hey, the good times will never end. This music is never going to stop. Right? You and I both know that that's not true, but from a human nature standpoint, I think there is that tendency to say, hey, the good times will always last. And so what's worked for me in trading news is there's a very small amount of time where you get an outside range where it goes all the way up and it comes all the way back down and then hits in the middle. Usually you're going to see a run one direction or the other. And so I'm willing to personally take that bet of playing the pullback, however small it is on that first one, and then positioning myself, long or short for a continuation of that initial announcement.
Yeah, absolutely. I think that's when I start to get, I don't mind playing a little bit of that initial volatility. It doesn't, as long as I don't go in too deep, and as long as I don't get too committed, and as long as I'm willing to take some big losses during that, then I'm okay with that. But most people aren't, right? Most people aren't willing to take those losses. They're not willing to book a 20, 30 pip loss on a trade. So it's a lot more prudent to...
A lot of people that I've seen that I evaluate being in the fund is that the reason they're not willing to take a 20, 30 pip loss is because they're over leveraged. So I love what you said. I like to go in small, and that should be our MO on any trade, right? We should never over leverage or get ourselves in too deep too quick, because I never know where the market's going to turn. If I did, I'd go all in, but since I don't, I have to manage my money. And I love the expression, you hear it all the time, you got to keep your powder dry.
Yeah.
Right.
Got to keep your powder dry.
Yep, and that just means that you go in with small amounts. You use little amounts, and so when it does go in your favor, you can use a lot of powder when you actually need it.
Right. Well, speaking of, we're now 10 minutes away from the initial announcement.
Yeah. Do you want to go to your chart and kind of show us what you're doing?
Yeah, you bet. I can jump in there. I'm just trading a little bit of the. I'm just scalping a little bit of the up and down movement prior to the announcement. So just taking little bits. Normally I'd be trading a 0.1 lot size. Right now I'm trading a 0.05 lot size. 11 minutes, so 10 minutes away. Half of what I normally will trade. The initial announcement.
Yeah, do you want to go to your chart and kind of show us what you're doing?
Yeah, you bet. A little bit of these up and down movements prior to the announcement. I'm just trading a little bit of the. So if I feel like a little bit of the. Let's just go through the 3 scenarios. If I feel like I have a pretty good idea that the euro's going to rally after the event, then I'd be building a small position right in here. I'd start, picking up layers as it comes down in here. Start building some long positions, which I've done a couple of times.
I'm just
trading a little bit of
I wait for the market,
so let's just go through the three,
and
and then to start to get into some trades. Then I'm looking at the market breaking an upper pivot and a lower pivot down here. So I'll be looking for the market to break this sideways consolidation range. So I could even set up with a buy stop or some sell stops at those ranges. If I'm waiting for the market for the news event to hit, then we're going to see hopefully form a pivot above. I got to change some settings here. And continuous chart objects. So the news events hits, and it forms a pivot high, forms a pivot low. Then I'm going to use that pivot high, that pivot low to start to set up. So those are the three different scenarios and how I'd work that. For right now, I'm just going to kind of build. I do anticipate a little bit of the euro to rally in whatever happens. I'm expecting the initial push to be a rally. So over the next couple minutes, I'll start to build a long position in here, and see if I can pick up a little bit of pip action off of that.
Well, let me see. Let me kind of show you my chart and what I'm looking at. We've got 8 minutes, if you don't mind.
Yeah, you want to switch over there? Yeah, perfect.
So here I'm looking at the pound. This is a 5-minute chart, and what I'm tracking in my mind and what I'm looking at is these pivots right here. Okay, and what I'll do is I'll just track the pivot highs and the pivot lows. Okay. And the thing that stands out to me right now, based off these last couple pivots, is that we're really in this wedge or pennant type of scenario here in the market. And so what I'm looking at is I'm really looking for price to move outside of that, right? So that's the buy stop, the sell stop. So what I'm going to do is I'm going to put a buy stop in the market up here. We're going to do it like you said, really small, so that I can go in with more. Let's see, my take profit. We're going to take out the take profit, and where's price? 26.59. So what we're going to do is we're going to put that right below at, let's do 43. Okay. And we'll have no stop loss, and we'll hit submit. So there's our buy stop. Oh, take profit. All right, we're going to put this way up there so it's not going to get hit. I'm going to put it at 2,800. Okay. I love computers except when they don't work for me. That's the best part. So I'm going to set this up again. Okay. So we're going to take out our trailing stop. We're going to put it at 2,800. My stop loss is at 26.
Hey, Nate, there's a question about slippage. Are you concerned about slippage?
43. You know, not really. You know, it's one of those things where, oh, whoops, no wonder I couldn't get in. All right. Okay, so slippage is one of those things where, am I concerned about it? yes and no. I mean, it's just one of those things that it's a risk. I know that it's a risk.
Oh, I just got triggered into a trade. And hit my profit target.
But and that, ladies and gentlemen, is how to prematurely trade the market. It is a valid question, but I think when what you have to look at is a lot of times what people focus on, and I think this is just human nature, is we have this range of things that can happen, right? And people say, should I be afraid of this 0.01% of the time where this happens, right? So slippage, okay, I'm gonna risk 2 or 3 pips. I'm gonna have it on that it slips.
I almost say you count on slippage. You just say it's gonna happen. I almost say the slippage is gonna happen. It's gonna be 2, 3, 4, 5 pips, whatever that is, but it's part of life, and I almost don't even worry about it.
And it's just the cost of trading, right?
Right.
And do I like it? No, of course not. I would rather have 0 slippage, but it's a part of life. And so as long as that goes into our calculation, that's a small risk relative to the volatility that we're going to get.
Well, and then the other thing, when you're trading news events like this, when you get the slippage on the entry, but you're also going to get the slippage on the exit, right? So you're going to get the slippage on both sides. It may be, the longer time goes after the news event, the smaller the slippage is going to start to be. So, but in the moment, if you're just catching those big initial, you're not setting this up for the moment that the trade happens. You're setting yours up for, 3, 4, 5 minutes after the event happens, right?
Right.
And so your slippage, your chance of slippage at that point is a lot less than the initial slippage that I'm going to be facing during the initial news event, right?
So you can see I've just bracketed the market. I'm going to, whichever way it goes, I have a stop loss in. So if I get whipsawed out, that's my worst case scenario. And I'm going to sit here and I'm going to let it move whichever way it's going to move, and I'll play the pullback. So that's how I've set up. I've got 3 minutes. Do you want to show them on your chart what you're doing?
Yeah, I'm starting to build some long positions. I just so I've got a short position. I've got a short position, a pending sell stop down on the bottom. If we break these lows, it'll trigger that. Otherwise, I'm starting to build a little bit of a long position. I'm in not very deep right now, at half a lot. And if this market comes out with a big burst, a burst of energy to the upside, then all of these will close out with a small profit. And to be honest with you, I'm almost taking advantage of the slippage in this scenario, because I'm getting in with no slippage. If the market rallies and hits all these targets, then I'm going to have the slippage in my favor. So I'm almost playing the slippage to my advantage in this scenario. Ooh, just like that. So that just rallied pretty hard. We got 1 minute left. That's a little pre-market.
Those are pre-FOMC jitters.
Yeah, FOMC jitters. Someone had their coffee this morning.
Yeah.
See, I've made almost, I booked, okay, so here we've got news events starting to create some volatility.
And what we should see is once that news comes out, you'll see a big jump, almost a gap, one way or the other. And you can always tell when it comes out, because you'll see, oh, okay, so there was a jump on the pound, and then you'll see a pause and then a big jump, and that's everyone going, okay,
so we're seeing
what did it say?
Yeah, we're seeing the spread widen also right now, which is, that's going to trigger some of the, okay, so this is the initial push outside the initial announcement. And, ooh.
Okay, so I'm triggered short.
So this is why you don't go in. This is why you don't go into the pre-move. But we'll trade a little bit of this volatility. At least this is why you go in very light in the beginning. So I'm going to get stopped out on all of those initial trades. Now I'm going to start to build some trades. So I'm going to start to build, catch a little bit of that volatility as it comes in. Just booked a bunch of profit off of that. And let's see if this market rallies back up. So the initial push was lower. It just corrected all of this morning's trading. I'm sitting on about 115, 120 pips of losses right now. And here's the initial, so now we've got one pivot formed.
Okay, so I went short and I took 9 pips of profit. Now I'm up again. So we've got our initial pullback. And so now I'm going to be doing what you're doing, which is taking a little bit of just very small positions, and I'll start scalping off as it goes in my favor. I'll start scalping off. There's 4 pips. And there's 3 pips. So
you're getting into some shorts?
Yes.
So right now I'm trading. Sorry, it's moving so fast.
I know, it's one of those things where it moves fast and you have to think and talk at the same time. Can be very tricky.
I got a little bit of ground to make up.
So I'm just adding to these shorts, and I'm going to wait for a pullback.
So we should. Oh, go ahead. Sorry.
I was going to say, I always want to have my longer term view on one side where I can see what the overall chart's telling me, and then I have a shorter term view on the other side. Sorry, you were going to say?
Oh, I was going to say, so I'm booking some losses through all of this, and I'm trying to. What I'm looking for is I'm waiting for a rally to come in, and the opposite to the initial move, the opposite move. But what we're going to see is we're going to see a little bit of, there we go, a little bit of a rally there. And then another one. And now we're going to close out of some of these. What we're going to see is we're going to now wait for the announcement. So we've got the report that we just hit. And then now what we've got to do is we've got to wait for the announcement to hit. So what is it that Powell is going to, what is he going to tell the market? And that's going to be in 30 minutes. So we've got a little bit of I expect that the market will kind of bounce around for the next 30 minutes. You got this initial move, which is extraordinarily big and counter to what I thought it might do. But now we're waiting for Powell to talk and kind of give the market his views on everything. So the way that I'm trading right now is just catching volatility. I just need the market to move. That's really what I'm looking for. As long as it moves, I'll be making some money. Because I'm not going for a lot of big income. I'm just looking for small little pieces, little piece work here, little piece work there, just catching a little bit of that volatility.
So we're just barely getting the first pullback after this announcement.
Yeah.
And so what I'm going to be starting to do is starting to build a short position to take advantage.
So there's a question in the chat box about pivots. I initially drew that pivot down here because that market rallied up, but the real pivot is now right down here. We've got the upper pivot, so now you've got two layers where you can set up some buy stop, sell stop. So if the market breaks up above here, I expect it will continue to move higher. If the market breaks down here, I expect it to move lower. So now this is the third way to trade the news events like this. You've got your two pivots set up after the news event. Boy, and this really wants to keep going lower, doesn't it?
So I just got triggered into my short position, and so as we have price and time, I'm going to be just scalping, building that position, meaning I go in with multiple positions, similar to what you do. We go in with multiple positions and start legging in and legging out of some of the different levels that we've built. So I just got another trigger to short. So again, I'm just building these small positions. Nothing too outrageous.
So just to give everybody an update, I started out just over 1,000 pips. Right now I'm just over 1,000 pips. So I had built all that half a lot longs up at the top. That was just the wrong thing to do. That's the risk that you take, kind of guessing what the market's response is going to be to news events. That's why we don't encourage that type of trading beforehand unless you're going in real small. Since then, the market has dropped, and I've been able to recoup the losses that happened during that initial leg lower, and it's just kind of chopping around here, not wanting to move lower, not wanting to move much higher, just kind of giving us a lot of tails on the top, tails on the bottom, but not really running at this point. The initial response, can anybody, what was the initial response? Obviously they raised rates.
Does it matter? We're making money.
No, it doesn't matter. I mean, it matters, but have someone type in the chat box what happened. What was the result?
I can. I'll tell you this. So I was. I misquoted. By the way, I like to be open and honest about all of my trading. But I had that buy stop in the market, and it didn't look like it hit, but apparently it did.
After you look at it.
Yeah, and so anyway.
Take a closer look at the market.
Well, it hit, so that volatility got me in. I took a loss, and then again, I've been building a position. So now, here, do you mind if I switch over?
Oh yeah, no.
You can
fine.
see where I took where I've gotten in, and this is the great thing, is you look at the top of that wick, and then you look at, even with taking a loss, there's not a whole lot of risk now, because I've been working in and working out of these positions. And so that's why I always tell people, volatility is a great thing.
Yeah, no, volatility is wonderful.
People always ask me all the time, do you like Trump? And I say, it depends on if I'm long or short and when he's at his computer. And so, he creates volatility, and I either like what he says because I'm long, or I don't like what he says because I'm short. And, it is what it is. So you can see, I'm going to build into another position here. Sorry, and we'll go and whoops. Again, the objective on this is just to scalp a little bit of A little bit of profits right there. We'll take six pips, and just like that. So again, for me, it's just a function of you look at where my stop loss is, where I got in. This is the advantage of building into a position is now my worst case scenario. If Jerome Powell comes and he says we're never raising rates ever again, okay, that would be very, very bad for the U.S. dollar, right? Okay, so if that were to happen, my worst case scenario is I've got a stop loss of 22 pips. I'm up 10. My worst case scenario today is I lose 12 pips, right?
Right.
My best case scenario is he says, no way, 2 rate hikes isn't enough. We're going 6, right? we're going a lot more basis points. That would really strengthen the dollar, right? So, and again, those are outside events or black swan events. That's probably not going to happen. But we always need to look at our trading in a way where what's the absolute worst case scenario that could happen to me, and am I prepared for that? Am I okay with that scenario happening? And if we say yes, then you take the trade. And if you say no, you're probably over leveraged or it's not a good trade, right? So I'm getting another short signal. So let me just...
Yeah, it looks like it might have another leg lower at this point. This might be well, maybe not.
Or not. Yeah, I mean, that's the way they... did you want to show them what you're working on?
Well, yeah, sure. So I'm just trading this volatility inside this consolidation. So basically taking longs on the outer edges, on the lower edge, taking shorts on the upper edge. I've got two longs that I got caught into a bullish trade right in there when it broke out. So that I got into there, but I'm just really just scalping inside this range. It's been kind of good.
I guess I ought to come over and actually see what happened. I'm going to open up my internet and actually read this statement.
This is where Nate's short might pay off right in here. Because if we break below that, if we break down out of that, we've got another. The chances of it testing that low are really high at this point. I mean, really high. So we could take a little scalp in between there. So I'm trading both sides. I've got longs and shorts on right now. And we'll book profits. And let's see if we get that break right here. It's going to happen. This is a good place for it to happen. No, and still those longs are at support, still holding strong. We'll delete that. There's no way, really, folks, there's no real way of knowing what's going to happen right now. So I'm not trading based on my great forecasting ability right now. I'm trading based on volatility. All I need is volatility, and whichever direction. I love the up and down movement because I'll just take the inside of that up and down movement all day long. But I'm not really forecasting a direction at this point. I'm just forecasting volatility and trying to pick up some profit inside that volatility range. Here's a leg lower. Okay, now all those shorts triggered. Now let's see if it stops here, right here. So I'm going to put a bunch of longs in now. And I'm trading super small so that if anything starts to run, I want to make sure that I'm not too deep. I'm not too big. because this is the challenge of trading volatility, is that volatility is going to break eventually. And when that volatility breaks, you're going to have a running market. And if you're caught in the wrong side of that running market, then you're in trouble. So you got to make sure that you're not getting too big, and that you're willing to take the losses when that market breaks. You know, eventually this volatility game's going to end.
Well, and we kind of know when it's going to end. It's going to end in 15 minutes.
In 15 minutes, yeah.
Yeah, when Jerome Powell starts speaking, right? So it's not a bad play to play the volatility, you know, for that time.
Yeah, there's a question about video lagging, and YouTube's notorious for that. I'll ask a question, and 2.5 minutes later, you guys are starting to hear the question. So yeah, there's a little bit of latency happening right now. Did he come out? Here's a question for everybody. Have they held their press conference yet? Or did he just release his notes?
He just released his notes.
So he released notes.
I was following somebody on Twitter. Who is it?
So the press conference is still yet to happen. All right, here we're starting to get a pattern form. We've got lower highs. I need to close out. I need to be getting out of all of these shorts at this point. We've got lower highs, lower highs, lower highs, lower highs coming into a support bottom. So what I need to do is I need to start lightening my position, because this is where the market could break into another leg. So I'm going to start peeling off a little bit of these longs. Maybe if we can see a little bit of buying action come in, I'll buy a little bit more and wobble a little bit. Use the profit off these to compensate for the losses on the ones up here. But I need to be getting into a less of a direction and more of a neutral position. So I'm adjusting right now. I'm going to start to adjust out of trading these. Oh yeah, see, we're building that strength. There we go. I gotta think and trade now. All right, see that pressure's kind of coming down onto those onto that support down there. And so I want to make sure that I'm not getting caught on a runaway market. It's following a trend now, not this choppy trading anymore. It's following the trend, and I need to make sure that I don't get caught as that trend strengthens and moves to the downside. So let's maybe build into some shorts in here. Very small, very light right now, because I'm anticipating a little bit of a transition zone right now. Transition trading, where a trend starts to be established. And this could be a bull trap. That sounded bad, didn't it? Bull trap. Mm-hmm. Man, this market's a bull trap.
Oh, bull trap.
All right, so I'm using the profit that I made on that to close out of some more of those longs. And let's see if this starts to establish a trend.
And here's the thing to note about surfing in the markets is we saw that huge volatility, and Shawn had his hands on his keyboard and he was clicking, right? And now the volatility is what? It's gone out of the market, right? And so when there's no waves, don't go surfing, right?
Yeah, no need to surf.
And so right now we've built a good position, and there's I can't make this. Doesn't matter how much money I throw at this market, it's not moving according to me, right? It's waiting for Chairman Powell to make his statement, and we've got 9 more minutes before he starts doing that.
Right.
So we should expect low volatility for the next 9 minutes, which is very conducive to the way that you trade right now, right? is that you anyway, I'll let you explain what you're doing. But my strategy is I'm in my one position, and I've worked in and out of a couple of positions, and now I'm waiting for him to speak, and then we'll see more volatility. And if he comes in very dovish, guess what? I'll flip my position and I'll go long. Right? I don't care what he says.
Yeah, no.
I just care if it's longer, if I should be long or short. But yeah, what are you working on, or do you want me to show them what I'm doing?
Oh, I'm just I'm just looking for some volatility. You're right. The volatility is kind of seeped out of the market. We don't have the volatility that we had back over here, and everyone's kind of just waiting right now. What kind of questions are reporters going to lob at the Fed chairman, and what is his response going to be? I think he's going to take a dovish tone again, but again, I don't like to go in thinking, and having a good analysis. I like to be more responsive. I like to have that ability of not having a bias before I get into trades. Now, I did shift from longs into shorts, so I've got 2 layers of shorts on the books right now. And my problem now in the trading is the volatility is not there. So I need to let these close out. If I can get any kind of movement back down to those lows. And then I need to just kind of wait. Need to keep the hand off the trigger. Right?
That's right. Yeah, if we go back to that sports analogy, if you're playing a basketball game, you can control yourself. You can't control the other guy, right? So I never want to second guess what Jerome Powell's saying. He's a lot bigger. He's a lot stronger than I am, and so I want to just be on the wave of that, of whatever he says, and to follow, to follow it. So here's the play from here. Do you mind if I take over?
No, go ahead.
Here's the play from here. So we got into a long at the volatility got us in. We got stopped out, and then we were short. As it pulled back, we got a couple more signals short, and then right in through here we got a couple more signals. So we've just been taking just little, I believe you call them sips, right?
Yeah, little sips out of the market.
Little sips out of the market, and you can see where our current position is. Our cost basis is somewhere up in the middle of this range, upper part of that. And so as we see volatility come back into the market, what I'll do is I will put a sell stop right through these areas right here as Jerome Powell starts speaking in 6 minutes. Or what I'll do is it breaks above this high right here, we'll flip our position and we'll start going along depending on what the market structure looks like. But you can see how quick it was on these candles. It would just jump, and right now you're really not seeing that, right? So we've got 5 more minutes to just kind of hang out and smell the roses.
Yeah, while we're waiting, don't forget to subscribe. Make sure you like this video. YouTube likes it when our subscribers like our videos. So for some reason they like to see engagement that way. So go ahead and like the video, subscribe to our YouTube channel, and and that way in the future events you'll get a notice saying that we're about ready to do another event in the future. So.
And comments. Tell us what you think about this.
Yeah,
was
we
it
got a lot
helpful?
of good comments for sure. A lot of commenting.
Was it helpful, or do they want to see different events? See us trade?
Yeah, maybe they don't like watching us trade
non-farm
like this.
payroll, or something. No, like I say, FOMC is like Christmas Day. You never know what you're going to open up.
Yeah, it's like a box of chocolates.
That's right.
You get a box of chocolates.
That's right. So we're 4 minutes away from him speaking, and my guess is that the market here is going to be a little bit more. You'll still see volatility come in, but it will be more tame. Because if the reporters start lobbing questions and he is overly dovish, right, you'll see the U.S. dollar really weaken. But it will be through a series of questions, right? So it's not one announcement that we've already seen. But I think Chairman Powell is pretty good at staying on his script.
Yes,
and,
he is. He really is.
What I expect to see is him say, they'll say, well, are you going to raise rates 2 times or 3 times? And what he'll respond is...
Well, I think he already announced that. He's already given forward guidance in his notes.
And then everything from here on out will be guided by the numbers.
Right.
Yep.
I'm building a little long position right in here. Am I on display now, or?
Yeah, I just switched it to you.
So I was in some shorts. I closed those out as the best I could down in here. Now I'm building into a long. We've got a little bit of the market's holding, so it's rallying up and holding. And I like that for longs. So I'm not gonna get in too big because who knows what's gonna happen. There we go. Those longs are just fired off, and kind of wait again. If it pulls back, I'll build another layer of longs. If it pulls back into this range back in here, I'm not opposed to building another set of longs. And I could start to build if this thing starts to trend, I could start to jump on a trend, but not real, it doesn't really know what it wants to do yet.
We've still got 2 more minutes for that.
Maybe I need to put my other hat on.
Your lucky bowler hat?
My Santa hat's not working today so well. I mean, it's working good enough. I'm not losing money. But maybe I need the bowler. It always seems to give me good luck. So again, it's just moving really slow, just super slow right now. And I'm building into another layer of longs right about in here.
One thing I'm seeing is, and you'll see this a lot, right as the news will come out, you'll get a technical signal that will cause it to move one way or the other. You see that all the time. Of maybe at a certain point you'll have a breakout trade right as the news is coming out, right? Or it's right at support or resistance, and so you get those technical signals coming in and into the markets. So we should.
So we should start to see something happen then. Right about now. They should be starting to chat it up with at about now. Now. 3, 2, 1, go.
Yeah.
3, 5, 4, 3, 2.
In 3, 2,
2,
5,
1,
4.
5,
yeah.
4.
I
Giving
wish
it plenty of an opportunity.
I wish the market listened to me as much as I talk to it.
That little long trade's holding out pretty good. And see if we get this little marching trend start to form higher. Picked up a little bit there. Still not the volatility that I'd like to see. Kind of an interesting, you don't see this pattern very often, do you, Nate, on a news event? Normally you like to see, you get to see a lot of you get a good move around the pivot, and we're not getting any movement around the pivot.
Okay, we just saw a little bit of volatility. Maybe that's
Someone said something somewhere. And right back down. See if we get a retrace of the retrace. Typical price action reading is not going to be super reliable right now because the markets are in a responsive state, not in a how markets ought to move state. So you just kind of have to remember that, you know, reversals aren't necessarily reversals. Trends aren't necessarily going to be your friend. Because technical analysis during news events like this tends to respond to what's being said, not what it ought to do. Not classical price action. All right, another leg lower. Test these lows.
So I got a signal to short, so we're shorting again. So who knows? Maybe Chairman Powell is coming out more hawkish.
He might be.
Than they had anticipated. That would be the reason you'd see the dollar strengthening.
Yeah. I'd be anxious to see anyone who has news on. Ooh, look at that. Nate, you're making money. I'm losing here.
So we've broken the lows.
Yep.
And we're now. I'm going to wait for some sort of pullback, and then we'll play it short again. And this is how you really build into a position. I